Okay, so finally, let's look at the pre-market movers and some chart levels.
Okay, well we've got a couple of luxury retailers on the board this afternoon. So Michael Kors, first of all, we've probably all seen our girlfriends and wives looking longingly in the shop window at some of his handbags.
Right.
They've moved down by about 5.8% pre-market. They reported last night. They're on a slightly different cycle to most other US stocks. They were reporting for Q4 2014, and the Q4 figures read well. I thought they looked pretty impressive. However, the devil is in the detail with these things, and their guidance for their own Q1 2015 numbers was well below forecast, with the range of around $930 to $950 million as against the forecast of north of $1 billion. So they're down, as I say, 5.8%, whereas Tiffany, another shop popular with
luxury,
ladies,
yep.
Up 3.5% pre-market. Sales were weaker in Q1, but they've had a massive beat on actual earnings. So they came in at 81 cents versus the street expectation of just 70 cents. So, they thrashed that. They were also very upbeat about the guidance going forward, despite some fairly negative numbers from Japan. They look very uninspiring to me, but the management seems to think that the rest of the world will be doing okay for them going forward. So, as I say, up 3.5%. And now levels to watch today. The ground moved under our feet to some extent while we were off air, so everything's changed. But as far as the FTSE is concerned, we're back just below 7,000 at the moment. So we're looking at 69.64 on the downside there, and 70.50 to the upside. Quite a big retracement in the DAX as well. So we're now looking at 11,620 on the downside and 11,712 to the upside. In the US. We picked out 2100 for the S&P on the downside and 2115 on the upside, and in the Dow 18,035 on the downside, 18,230 on the upside. Just to say, by the way, that in both of those US markets they tested right back to their 50-day EMA lines yesterday. So if you are plotting these on the chart, do watch those levels closely, because a break below that would obviously be a negative signal. Right. In terms of the currencies, no bigger mover really than in euro dollar. The bias has completely retraced, so we're back down to 108.60 on the downside for the euro against the dollar, and to the upside we need to see it move back above 109.10. So several big figure changes have come and gone there in the last few days. Similar story in Australia, the dollar rampant here and the Aussie dollar suffering. So 76.20 now on the downside is the level to watch. To the upside, if we got through 77.47, you could probably round that to 77.50 if you wanted. That would be an interesting level on the upside. And then we come to our old friend dollar yen, and finally
ticking up. Yeah,
the yen's given way finally. Not really sure what the catalyst was for that, but perhaps we just put it down to dollar strength generally. But 123.13 now is our downside level to watch, and to the upside 124.20. And you've got to really look at long-term charts to dig these levels out now, because we're at prices we haven't seen for sort of almost 5 to 10 years. And in cable, well, 153.54 at downside level, and to the upside 154.40, a slightly tighter range in that one. I think it's really, the pound's really trying to find its feet.
It strikes me everywhere. US dollar looks to be trying to go stronger and better. Does, yeah. Understood. Okay, Darren Sindon, market commentator, Admiral Markets. Thank you for the Wall Street crossover show. We'll see you same time tomorrow. That's 1 o'clock. Have a good day. Thank you.